prices hit a two-month low today, pressured by talks of a deal on the debt ceiling in the U.S. and a possible pause in interest rate hikes by the U.S. Fed Reserve. Prices have fallen from 60,680 rupees per 10 grams in the Delhi spot market to 59,767. The fall has been particularly steep in the past 2 weeks. We're joined by Navneet Damani, Vice President, Commodity Research at Motilal Oswal Financial Services, and Vandana Bharti, AVP Commodity Research at SMC Global, to discuss the precious metal. Thank you both for joining us. Let me start off with you, Vandana, and get a sense from you, because just when everyone was anticipating gold to hit those record levels, given fears around the U.S. debt ceiling, we've actually seen a complete reversal, and quite a steep one at that, in the last couple of weeks.
Yeah, very true. Actually, it hit the high of $2085, and from there we have seen a fall, and now it is trading near $1950 kind of level, and it is almost a fall of more than $130 in a month time. So yes, the more fall is expected in this market because we have some negative triggers for gold, and one is that there is a positive talk on debt ceiling, and dollar index technically even it is looking high and likely to touch 106, which is very negative for any commodities prices, especially gold. So gold will react on that if it touches 106 or 107 level. Another thing is that in this week we are expecting some positive data, and there are three crucial GDP data from India, Italy and Germany, and all three it is expected to come in positive zone. So it will again give a pressure in gold counter, bullion counter in fact, and the safe haven buying we may see it will steal the safe haven buying from gold counter. So in international market we are expecting that there should be a decline towards the level of $19-20. If we talk about the Indian market, 58,500, 58,400 is a very good support, and considering the depreciation in INR, we are expecting that there should be a limited downside in Indian gold market.
All right, so limited downside. Now, Navneet, let me get your view in as well, given the variety of factors at play. Let's talk about the global market first, and whether or not you feel some of those triggers have receded, given that the debt ceiling talks seem to be on track now. However, the Fed is yet to hike rates, and it looks like they're going to be doing that.
Well, yeah, to be very fair, gold has its own set of fundamentals which are driving the prices at this point in time. We started the year on a very flattish note, but the rally has caught up everybody by surprise from $1,650 to $2,080. That was a non-stop run-up which was seen in gold. However, I strongly believe at that point in time that the markets had overshot themselves and were due for a correction, and that is what we are witnessing at this point in time. Now, to talk about the debt ceiling, I think that's largely done deal, and it's not the first time that debt ceiling overhang is kind of impacting the market. Of course, it gives an impetus to safe haven assets, but that is not getting reflected at gold at this point in time, which gives us an indication that sooner or later, probably in a week's time, we will have some probably conclusive result out of the debt ceiling fiasco. To top it up, we had some banks which were under stress in the US, and the expectation of a possible pause over the next couple of Fed meet, but now chances have now started to once again indicate of a 25 basis point hike as we approach the next US Fed meet. I strongly believe that gold prices, if there is some more flesh or probably some more bad news coming in from macro front or any escalation in the war, then there could be a strong positive uptrend in gold prices. Otherwise, say probably for the next couple of quarters, we've already hit the top and we could be heading downwards.
All right. Possible 10% downtrend, that's actually quite significant. Vandana, let me bring you back in here, and you also talked about the factors not really stacking up. For those that were already invested in the yellow metal, should they be looking to book some profits? And for those who were perhaps looking for other asset classes to invest in, would you advise just sticking to equities then, or any other commodities right now if we're anticipating softening when it comes to gold?
Yeah, it depends upon duration. If they have invested for short term, then definitely this is the time to book the profit. But if anybody has a vision for a year or 1.5 years, so I'm still very bullish in gold because see, if we see the economic indicators, global PMI is near 50. Mostly the major economies PMI, they are below 50. Even China PMI is 47 right now. So these things are indicating that the economic health is really not very good, and definitely the safe haven buying will come, and it will reflect in the currency factor as well. So another 25 basis point hike hike, if it happens, then it may give a temporary downside to the gold prices, but again it will again give the pressure to the economic performance, and safe haven buying will return, and definitely it should start an uptrend from the month of September, because if we see the seasonality, if we see the facts, check the facts, after since 1976, we have only seen 7 or 8 times that gold moved down in the month of September. So this is the time to go for seasonal buying in gold. So August lower side in gold, it is considerable to very good buying point for gold for the entire year, and fourth quarter definitely will be for gold, and there we can expect that new record high should be made there in international market as well as in domestic market. So for short term, I am bearish in gold very short term, but if somebody took the gold for long time, I would suggest that hold your gold in your portfolio, and it will definitely safeguard your portfolio. And for 2023 in international market, I'm expecting 21 dollar. In domestic market, I'm considering the new high of 63,000 to 63,500. So again, it will be a win-win situation for 2023 in gold, and it will be another year of hike for gold.
Would you agree? Let me also get Nathan on this to understand if he's concurrent with the kind of targets on the higher side here, Navneet. Okay, she said short term we could possibly see a blip, but would you be in concurrence with the target on the higher side?
Well, it's a divided opinion at this point in time, and it is really difficult for the investors also to figure out what's to be done. But you've already seen about a 7% correction in the domestic market, or probably in the international market also, in the last 1 month's time frame. And I think that comes on the back of 20% successive rally over the last 4 months. Now to time it here is a little difficult. Maybe as I mentioned, maybe 2, 3, 5% upside could be in store. But from a medium-term perspective, I'm not pretty confident. I would rather place my bets on silver. Probably expecting a revival in the industrial economies, and probably a strong pent-up demand coming in from China. So my money would be on silver rather than gold at this point in time.
Let's get your view, Vandana, on silver and whether or not we'll see better opportunity for returns there.
Yeah, silver it is a shining metal, and the shine will increase by the in the years, because the more we talk about clean energy, green environment, more silver will be used by the various like companies and factories and everywhere. And since 2012, we have seen first time in 2022 that the demand surpassed the supply side. So it is happening, and even in this year, the demand will higher than the supply side. So this time we are expecting that the gold-silver ratio should improve towards 1:75. It hit the low of 1:95, 1:97 in 2022 when the war occurred. What started. So like in coming years, we are expecting that silver will outperform gold, and in international market we are expecting that there should be a higher side target of around $35 to $36, and surprisingly it hit a record high of $50, and now it is trading near the level of $25. So it is almost half prices down from the record high, and gold is making record high every day. So this is the time when silver will outperform gold, and the industrial demand is increasing, and it will push up the silver prices, and marginally the silver ETF buying is also increasing. So this is another positive factor, and in domestic market we are expecting 85,000 kind of level next year in silver.
Great speaking to both of you and hearing both your views. I'm glad we found some consensus at the end of it, and good to hear what's happening in the world of precious metal. Thanks so much for joining us.